Welcome back. Let's take a quick look at how the markets have performed then. It also has been topsy-turvy, of course, of late. But today, perhaps a little bit better off, though. So all green out in the Asian stock market, seemingly the positivity coming through from perhaps more hopes of stimulus out in the United States. Yes, there have been soaring cases when it comes to coronavirus as well out in the United States and, of course, globally as well. But seemingly more hopes then of stimulus indeed helping the market along. Even the likes of the Shanghai Composite managing to just eke out a gain there, even if it is just 0.1%, but still managing to head in that positive territory. It's also helped out the European market, even if it's just the DAX that goes down around 0.33%, but the rest of the market managing to tick higher. It isn't necessarily the biggest of gains, of course, at a time like this, but it is still upward, and that continues that bull run we have continuously seen, of course, across the year. Just a quick note as well, out in the United States, the S&P 500 remains around 3% away from its all-time high as well, which it reached in February. And at the same time, then you have the likes of Apple, which saw their stocks gain around 5% as well yesterday, and they only sit $140 billion away from being the first company to hit $2 trillion in terms of its market capitalization there as well. $140 billion away from that mark. So it just tells you then that the tech count is certainly doing well, which is pushing the market ahead as well. Let's remember, of course, with the Donald Trump saga accusing China as well of many things. Among those, of course, is things like espionage and the like as well, spyware and the like. It means that he has asked that we ensure that TikTok be sold in some way or other. Well, it seems that Microsoft, again, a US firm, is very interested in buying TikTok, which would make it an American part of that business then, which means then it would offer some good hope. So the tech count is continuing to rise on the back of that news as well. Also, very interestingly enough, in terms of merger news and acquisitions, ADT, the security firm, getting some good numbers as well in trade yesterday. In fact, their numbers saw a spike in that share price of more than 56%. That's the gain in that share price. That is after Google had said that they would buy 7% of ADT for $450 million US. So clearly, the tech firms have some money to splurge and money to put out, and they're pushing that back into the market and acquiring as the market continues to need, of course, a whole lot of injection as well. So taking advantage of proceedings then. All of that has meant that the general market index, even locally, has enjoyed some positivity, more than 0.75% higher as well for the JSE All Share as well there, 56,265 points, a more than 1% gain for the resources, pushed up a lot by that gold index as well, which has been the shining star really amidst this COVID-19 lockdown. As consumers and investors perhaps look towards that safe haven, it pushes out all of those commodity stocks as well. So the gold index also pushing up the industrials. Just over 0.5% to the good, with financials also enjoying a good day, having fallen quite prodigiously as well yesterday. Onto the commodities board, well, the Brent crude price is down almost 2% today, but still hovering near that $43 a barrel mark, which it has consistently been near for quite some time now as well. Then, of course, more question around that 1.5 million barrels per day of oil that is pumped back into the market then, and whether that'll help as supply not necessarily picking up as much or rather demand not picking up as one would have hoped when it comes to the oil market. So if you pump more oil into that market, then it means the price is bound to go down. So not necessarily sure where exactly that's going to go. It seems to be in that midriff region there as well. Platinum going up around 0.5% there, not too much to write home about, but still sitting $920 a fine ounce there. So I'm ensuring that it's dipped below 900 wasn't too long, while gold still sits at those very high levels there, even if it is down 0.2% today, $1,972 a fine ounce there. Weakness, unfortunately, for South Africa's rand of late, and now today falling 1.4% as well, sitting at 17 rand and 42 cents against the US dollar. So massive hurt as well that we felt on that front. It's not just a South Africa story. Of course, not so long ago we saw weakness in the dollar index. That's come back ever so slightly. So it means that there's weakness for the emerging market space as well. Of course, questions around whether the economy in the United States will be able to recover meant that went lower. But it seems that investors are trying to pick that back up then, which means that the rest of us certainly suffer as well. The euro, 20 rand and 50 cents, 22 269 then for a British pound. Let's chat to Sean Morrison then from IG South Africa as we unpack this market movement a little bit more. Sean, worried at all? The rand back above that 17 rand mark. Should we be worried?
It's starting to hit a critical level. We've seen that rand. I think last time I was here, we talked about a range with the rand against the dollar, about 16.30 through to about 17.50. And it respected that range. The prices rebounded off that level. By rebound, I mean dollars strengthening and rand weakening. And now we're testing that 17, we're getting close to that 17 rand 50 per dollar level. And we want to see the rand stay below there. We don't want to see it to break out, because that would, we don't want to see it test the worst levels of the year. We're having a rebound in the dollar, which is equating to weakness in emerging market currencies, like you said, which includes the rand. But I think there's also some, as we start to see a bit of news flow, there are some domestic catalysts start to form. And I haven't seen it in any of the news wires, but I do think that this news that SAB, AB and Bev's SAB, pulling back on 2.5 billion rand in spend, and possibly another 2.5, bring a total of 5 billion rand spend in the country. I think that starts to really bode poorly for sentiment, which is also contributing to this, well, I'm going to call it a blowout in the rand.
Certainly hurtful, I suppose, as you said, 17 rand 40 and more than for a US dollar. All right, let's get into perhaps some company news then. Yesterday we got word then out of ShopRite, they're pulling out of Nigeria. That was perhaps the brainchild of Whitey Bisson, who was CEO for ShopRite for quite some time. So clearly there's a problem in going into the African markets, and even the ones that have been stable out there for so long have certainly suffered. And now Pick n Pay also 50% cut perhaps in those profit or earnings numbers. More than 1,400 odd employees also taking voluntary severance packages. It's not a good time for retailers, despite the stores still remaining open.
Yeah, so I think the ShopRite story, that's really following a trend. We've seen a few other companies leaving Nigeria. Oil-based economy, volatility in earnings, but proving to be difficult to do business there. Market actually reacted quite positively to the ShopRite results, the full-year results, or trading statement. And then today we have the opposite, where we have Pick n Pay getting sold off.
Yeah, it seems we continue to lose your network there, unfortunately, there, Sean. I don't know if you can hear us now, but we are struggling just a little bit with your audio. Don't you want to just start again then, perhaps, with regards to that ShopRite story, as you said, following a trend then when it comes to the retailers as well?
Yeah, Arabile, I don't know if you can hear me now, but I'll just say it's a trend there where we haven't exported. Yeah, a lot of South African companies haven't exported well into Nigeria. We've seen the likes of Mr. Price, Woolworths, and that disinvesting over the last few years. Difficult to do business. Volatile economy, oil-based economy. We know what's been happening with oil price as of late. When it comes to Pick n Pay, sharp drop in earnings, definitely impacted by this COVID lockdown. They haven't been able to sell a lot of the essential, non-essential goods. The liquor lockdown, and while food sales have still, continued as being essential, food sales are not high margin. They make a lot of more profit from merchandise sales, from a lot of the liquor sales. So it's showing the impact on South African business that the lockdown is happening.
All right. Very finally then, and very quickly as well, the mining companies coming out with a whole lot of different data, I suppose. Anglo American one day struggling, and Anglo Gold Ashanti, the announcement of their CEO Glencore there, perhaps seeing some good numbers. And this morning, Royal Bafokeng Platinum, seemingly big gains there, more than 200%, I think it is, in their earnings picture. And it seems that even their revenue base also going higher. So some good numbers for them there.
Yeah, very good numbers. The base of comparison was a loss-making comparative, so earnings it just shows you how volatile earnings can be within the commodity space and how dictated by commodity cycles they are. But a good set of results, good cash flow, good earnings growth, benefiting from a strong movement. I think it's close to 80% or 75 to 80% gain in the Rand basket, profitability from a gain in the Rand basket price of platinum. And obviously it's the four metals that they primarily produce. It's platinum, palladium, rhodium and gold. So yeah, good set of results.
Awesome stuff. Sean, thank you so much for the time. Appreciate it. We'll chat again then, of course, very soon. Sean Morrison is from IG South Africa there, helping us unpack this market movement. We'll be back then with more news for you right after this. Stay tuned.